Hey everyone, welcome back to Corporate Decoder. Today, M-tron Industries Incorporated MPTI just filed its first quarter 2026 results, and I am seeing some interesting moves in their cash and warrant activity. Quick note, this is not financial advice, just my take on public filings for educational purposes. M-tron saw a huge jump in cash flow from financing activities, largely due to warrants being exercised, which is a big story in this report. So, we are looking at M-tron Industries Incorporated's quarterly report for the period ending the 31st of March 2026. This is essentially a mid-year checkup on how the company is doing financially. Let's dive right into the financials. For the first 3 months of 2026, M-tron reported revenues of $14.7 million. That is a solid increase of about 15% compared to the same period in 2025, when revenues were just under $12.7 million. This growth seems to be driven by strong demand in the defense, aerospace, and avionics sectors, which are key markets for M-tron's highly engineered electronic components. Now, costs also went up, but not as much as revenue. Total costs and expenses rose by about 13%, from $10.7 million in early 2025 to $12.1 million in early 2026. This increase is mainly because of higher manufacturing costs, which makes sense with more sales, and also a jump in engineering, selling, and administrative expenses. The company mentioned this was due to increased research and development spending, more sales commissions, and general corporate expenses growing along with the business. The good news here is that operating income, which is what is left after you subtract those costs from revenue, jumped by almost 30%. It went from about $2 million in the first quarter of 2025 to over $2.6 million in the first quarter of 2026. This shows that M-tron is becoming more efficient and profitable as it grows. One interesting item is the interest income net. This shot up dramatically by over 233% from $111,000 to $370,000. This is because M-tron has a lot more cash on hand now, and they are investing it in money market funds, earning more interest. And all this leads to net income, the bottom line. Net income for the first quarter of 2026 was $2.4 million, a significant leap of over 46% from $1.6 million in the same period of 2025. This is a really strong performance and indicates the company is heading in the right direction financially. Now, looking at the balance sheet, you can see M-tron's equity structure. They have common stock, and the number of outstanding shares increased a bit from just over 3.4 million at the end of 2025 to about 3.6 million by the end of March 2026. This increase is mainly due to the exercise of stock options and warrants. This is a big one. Cash and cash equivalents jumped from about $20.9 million at the end of 2025 to a massive $51.9 million by the end of March 2026. That is more than double the cash they had in just 3 months. This surge in cash is directly linked to what happened with their warrants. At the end of 2025, they still had $22.3 million listed as warrant proceeds receivable. By the 31st of March 2026, this is gone, meaning those proceeds have been collected. And if we look at the cash flow statement, specifically financing activities, we see proceeds from exercise of warrants at a whopping $27.6 million for the 3 months ended the 31st of March 2026. This is a huge inflow of cash that came from warrant holders deciding to buy shares at the agreed upon price. Earlier, we saw that M-tron had issued warrants in April 2025. These warrants became exercisable by the end of 2025, and it seems a lot of people decided to cash them in during the first quarter of 2026, bringing a significant amount of money into the company. But that is not all. M-tron also conducted a rights offering where existing shareholders could buy more stock at a set price. They issued millions of these rights, and by the end of April 2026, over 83% of them were exercised, bringing in another large sum of cash, around $42.1 million. This shows that management is actively using these financial instruments to raise capital, which can be good for growth but also dilutes existing shareholders. Looking at the overall cash flow, operating activities provided $2.1 million in the first quarter, up from $1.6 million last year, which is positive. Investing activities used $452,000, primarily for capital expenditures, but the really significant figure is the $29.4 million provided by financing activities. This is almost entirely due to those warrant exercises and stock option exercises we just discussed. This influx of cash from stock issuances is important. M-tron now has over $51 million in cash and cash equivalents, which is a very strong position. This gives them a lot of flexibility for future investments, research and development, or even potential acquisitions. M-tron operates in a single reporting segment, electronic components, focusing on a wide range of frequency and spectrum control products. They are a pretty specialized company, serving critical industries like defense, aerospace, and space. A significant portion of their cash, over $49 million, is invested in money market funds managed by Gamco Investors, Inc., a related party. This is good for earning interest, but it also means a large chunk of their assets are with an affiliated entity, which is something to keep an eye on. The company highlights that in the first 3 months of 2026, their largest customer accounted for over 40% of revenue, and the second largest for another 13%. That is a significant concentration with just 2 customers. For accounts receivable, the top 4 customers make up over 70%, while M-tron says they have low bad debt historically. This level of customer concentration is always a risk. If one of these major customers were to reduce their business, it could have a substantial impact. In terms of employee compensation, M-tron recorded about $382,000 in stock-based compensation expenses for the first quarter of 2026. This is up from $249,000 in the same period last year, reflecting an increase in equity awards granted to employees. This is a common practice to align employee interests with company performance. They also have an amended credit agreement with Fifth Third Bank, providing for a $10 million revolving credit facility and a $10 million delayed draw term loan facility. Importantly, as of the 31st of March 2026, there were no outstanding borrowings under this agreement. This means they are not relying on debt for their current operations, which is a sign of financial health. Overall assessment. So, what is the big picture here? This report shows M-tron Industries Incorporated is experiencing significant growth, driven by strong demand in its core markets. The company has successfully raised substantial capital through warrant and rights offerings, bolstering its cash position. This financial strength provides flexibility for future growth and investment. However, a couple of points stand out as potential risks. The heavy reliance on a small number of major customers for both revenue and receivables could pose a threat if those relationships change. Additionally, while related party investments in money market funds offer interest income, they are also concentrated with an affiliated entity. Looking ahead, the company's ability to navigate these concentrations and continue its growth trajectory will be key. The capital raised puts them in a strong position, but effectively deploying that capital will be the next critical step. My biggest concern is still that customer concentration, as losing even one of those top customers could significantly impact their top line. What I am actually looking for next is how they plan to diversify their customer base or reduce that reliance. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, and subscribe for more. Check the Discord in the description.